Hello, and welcome to another update video on Bitcoin. We start here on the daily time frame, and we've seen quite a bit of a recovery from the crash low, the Friday low. Obviously, there are some differences across the different exchanges with regards to where the actual low forms. Here on my chart, it's around $105,120. Binance is $107,550. Coinbase, hold on, my screen just got black. There you go. Is $107,090. So you do have some differences across the sector, yeah, but they are minor here on the Bitcoin chart. Really, at least they're actually quite large, but compared to other charts, other cryptos. I mean, yesterday in the member live session, I mean, we went through more than 30 charts, and I mean, some of them obviously absolutely got nuked, and you have strong differences, especially between Binance and Coinbase. So it's a little bit of a struggle now to decide, right, which chart actually do we use for a certain coin. We can't just ignore the wicks, yeah. But if Bitcoin has just a small difference, it's not so much of a problem. But on the altcoin charts, obviously it is. So I have to go through each and decide. Here on the Bitcoin chart, it's good that it's not so much of a problem, because if I really see this as a fourth wave here, it is not a problem. It is not a problem whether the C wave ended above or exactly at the A wave low or slightly lower. That is all allowed in this wave 4, because we're treating this as an A, B, C. And the C wave landed here between 105,170 and 99,400, which is a standard target area for a C wave. There's some room we can give it. It doesn't even need to get there because the 100% extension target was higher. So basically, on some exchanges, we have a double bottom, which is okay, especially if we're dealing with a flat correction like this in a wave 4. But often I prefer a lower low. So, I'm happy with this chart as it is, because it gives us a clean low. This here, from an Elliott Wave point of view, is a so-called expanded flat pattern, where we say we have an A wave, we have a B wave, and this is an impulse down in C. A so-called sideways correction, I'd ask, okay, but that was not sideways. No, it wasn't. But the overall appearance of what happened there is more sideways, right? So we don't call this a sharp correction, because, this was, but not the whole pattern, because the lows are at a very similar level, and the highs are at a very similar level. It's just a range, okay? So that's what makes a flat correction different from, for example, a zigzag correction. Not sure if I find an example here right now, but zigzags are very sharp. Yeah, maybe this. Don't think it was actually a zigzag, but zigzags are usually sharp, right? So sideways often happens in a wave 4. So we can still keep the idea alive that this might be a wave 4, but I already gave you for this week the relevant resistance levels yesterday, and they are between 114,212 and $121,934. So we have now reached this resistance area already, which I think I mentioned over the weekend. This move up could be a B wave, obviously, which is developing here, and then lead to a C wave down in our orange scenario. Now, someone asked me, how can the orange count be long-term bullish? Well, the orange count just shows that whatever's happening here could lead to a larger correction. And then we can test lower support, and this might turn into a 1-2 setup, and the orange count just takes us there. A, B, C in wave 2. At the same time, this could then be ABC of wave A, and if the next rally is corrective, we can drop down further. But even that could be part of a long-term bullish thesis. Short-term, it's a bit difficult, right? Short-term, it's a bit difficult to say whether this is the white wave 4 or we're going to visit the lower support area. Now, at the moment, I give the white count the benefit of the doubt, but I'm going to pay close attention to this resistance box here, how the market reacts to it, and if we can generate a 5-wave move up on the micro level, which we haven't done yet here. Important to mention as well that we are still holding above all our all our relevant structural moving average support levels. Here, the 21-week EMA did hold. We did not get that weekly close below the 21-week EMA, which would have meant that we might move towards the 55-week EMA. Yeah. So, I mean, it's a strong wick. We have to say something similar happened before here in February, where we had a strong wick down below the 21-week, and then the next candle actually was bearish and took the price to a 55-week EMA. We need to consider that, yeah? So the last few times when we had a wick below the 21-week here as well in June, right? It's just something to be aware of. When we had a wick below the 21-week and we closed back above it, actually the next candle on the weekly drove it below. See, that's just something we need to be prepared for. That's why we talk about these moving averages. Because you have a first line of defense, which is the 21-week EMA, around 111K. It goes up every day or every week. And then we have the second line of defense, which I think is really, really important from a bullish point of view for this bull market. And that's currently located just below 100K. So if the first one breaks, it's not a major problem, but a first warning. So we basically we get two warnings. Right, and below the 55, I mean, maybe I have to revise my view that we might not get another high. I mean, so far, honestly, this cycle has moved perfectly in line with forecast for Bitcoin specifically. The Bitcoin cycle has followed impulsive structures perfectly. It's just a perfect impulse, yeah. Not that hype-driven as in previous cycles, but I explained in yesterday's videos why that is. I also talk about that a lot on the MCO Global channel if you're interested in the macro and bigger picture overview. Yeah. Now, let's take a look at the shorter time frame for BTC. And here you can see that the market bounced from our support area over the weekend, moved up, formed three waves up from the Sunday low, or Saturday low rather. And now this is the nearest micro support area. We're kind of consolidating above it at the moment. Here, this is the 30-minute chart, of course. So again, things are still very much moving. Yeah, still very much fragile. But as long as we're holding now 113,569, we can short-term watch for higher towards 119,487. I mean, there might be some resistance here as well. In this area, around 117,300, those previous swing highs from Friday. Also relevant, yeah? So above, we can look for 119,480. That's the next larger fib level above. And if we're working, even if we're working on the C wave in the orange count, we might get there. Now, what if we break below upper support now? Then we would likely re-enter lower support. We would likely re-enter lower support in a broader B wave or a broader wave 2. That would then again be a flat correction. A, B, C. And then we can try again. Highly likely, if the first breakout attempt doesn't work, sometimes Bitcoin needs just to try again. So that gives you the relevant parameters to watch for today in the coming sessions. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, feel free to join us here on X as well for additional charts, news, and much more. I'll leave a link for you guys in the comment section. Have a great week. Thanks so much. Bye-bye.
Thanks so much for watching the videos on this YouTube channel. If you've been thinking about joining MCO as a member, now might be a great time. You can use the link in the video description and apply the discount code right below it. You will get 50% off your first month of our Gold membership, and you can explore everything we offer. It's the easiest way to test the membership, see if it's a good fit for you, and get a feel for the community, join the conversation, and I'm looking forward to meeting you in our member area.